Did you know over the last 70 years, every time the Sydney market has slowed, the Brisbane market growth has increased? There's a very good reason for this. Almost always in Australia, the Sydney market leads the growth cycle. It normally has a boom that is 6 to 10 years long, normally on average 7 to 8 years. In that time, the Sydney market is often growing a lot more than the other markets. And often the Sydney market will get 50 to 100% more expensive than markets such as Brisbane. That price difference cannot continue because we are one country. As soon as Sydney starts to get 70 to 100% more expensive than Brisbane, people start to leave Sydney to look for more affordable markets like Brisbane. So interstate migration starts to accelerate. People leave Sydney and go to Brisbane. That interstate migration has a downwards pressure on the Sydney market and upwards pressure on the Brisbane market. That's one of the key drivers for Sydney slowing when it gets too expensive and Brisbane growing. The other key driver is international migration. It's hard to convince people to leave their home state like Sydney. But when people are coming from overseas and they've already decided to leave their home country, it doesn't take too much to influence them to move to a more affordable market like Brisbane right now versus Sydney. So when Sydney, like it is now, gets twice as expensive as Brisbane, you get a far bigger rate of international migration and interstate migration going to the more affordable areas like Brisbane, which helps the yields, the rate of rent increase, and capital growth increase. And that's one of the key reasons why just about every property economist in the country believes Brisbane will grow by 4 to 8 times as much as Sydney over the next 7 years. And that's one of the key reasons why we're advising clients to buy in areas like Brisbane right now.